Good morning, folks. Frank Zorrilla here, Zorrilla Capital, the 9th of March. I wanted to do a quick video just to show you what a winning trade looks like and what a losing trade looks like and how to play it. All right, so first let's look at the losing trade. Just recently we flagged Freeport-McMoran FCX right over here, going through this high of 1839. The stock was down 1, 2, 3, 4, 5, 6 days in a row and printed an inside day, which is very simply a candle where the low is higher than the previous day's low and the high is lower than the previous day's high. And usually under this context, the inside day, what it means is that this most previous move is pretty much coming to an end. And then the trigger will be when we break the pattern of, lower highs, which we got here, 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 all across the board for 6 days. So we got long at 1864, slightly above the buy stop because the stock opened up a little strong and I felt confident in the setup. So originally the buy stop was 1849 with a stop at 1790. So here's what happened, okay? We get triggered at 1864, stock hits 1889, and then there's absolutely no follow-through the following day. So I took half off as it broke the breakout day low, right around 1840, and I left half on until the original stop, and we were stopped out yesterday. So that's what a trade for me looks like, a swing trade within my portfolio of passive ETF strategies and some long-term stuff. This is what a trade to me looks like. And the reason why I took it off so quickly is because when you see a stock with this type of setup, okay, a stock that's down multiple days in a row like FCX, the way they typically work out is that once they get going, they're going to go for a few days. Like, for example, IDXX that we flagged right over here, which it was down 1, 2, 3, 4, 5 days in a row. And then once it starts to get going, this is what typically what you normally see. You see, tennis ball action, and you typically don't see the stock break the previous day low so quickly. Here, it didn't happen pretty much into the 13th day. GATX, a very similar situation, which is down multiple days in a row. Up on this day, this is when we got long, and look at the action. This is typically what you see. So when it doesn't move right out of the gate under that one multiple down days in a row setup and scan, then you know something is wrong. Here's the winning trade, APTO. This is something that we flagged right over here for a few days, and it didn't trigger. It finally triggered once it got through this high here of roughly 285 on Monday, this Monday. And we got long at 294. The stock pretty much exploded higher, 10% almost immediately. Then on this day, we got lucky. Some news came out, and the stock was up as high as roughly 388 in the pre-market. Up 30% from the buy stop. We took some off pre-market, and then once the market opened, the stock just sold off, so we took everything off. And it's important that, number one, that you take, when you're swing trading and your time frame is whatever it is, 1 to 21 days, that you take your losses immediately, okay? That's number one. Number two, then when you're looking for, 10 to 15% in the short term, when you get that 15, 20% in the matter of a couple of days, you need to take some off the table. I'm a firm believer in selling some on the way up. And if for some reason you believe the stock might go higher for whatever reason, then you can hold on to a piece. But the way I look at things is, number one, this is a big return in the short term. And number two, what I want to do is compound the money as quickly as possible. So I want to take stocks that are up 4 or 5 days in a row or up 15% in such a short period. I'm going to take that money off, and I want to get involved with something that's just beginning, that's just starting to catch that first initial move. I think it's a lot easier under these setups to try to squeeze out another 10 to 15% from this level right over here than to try to find another situation that's just getting started and squeeze the first 10 to 15%. That's number one. Number two, with some of these small cap companies, they don't follow through as well sometimes. So you got to take some off. Like, for example, we flagged CFGN the other day, right over here. These yellow arrows are pretty much when we got long, but most recently it was on 3-2. And we flagged it. We got long at roughly bought more at 8.10. The stock hit a high of $10 a share in some news announcements, up whatever it is, 20%, and then it sold off immediately. So you have to take some up, take some off on the way up. That's the easiest thing for you to do. And if for some reason, you have this itch to try to find a 50% winner, then you can hold on to a piece. But you have to realize that, like, for example, right now, out of 7,000 stocks, we have 141 stocks up 25% or more for the month. So, getting 15, 20% into short term, that's a huge move that you got to take off the table. I'll give you another example, GALT, similar situation. Stock had a big move, and it's still moving here pre-market, but we got involved in that here at first at 415, had a 10% move. We took a little off, and then nothing happened here, and then it triggered for us again going through this high, and it had a 20% move in a matter of 2 days. You got to take some of that off the table, take that money and rotate it into something that perhaps is just getting started, so that way you're able to compound that money, that swing part of your portfolio a little bit quicker. And what you want is you want to be involved in the lowest risk reward trades as possible. So trade them well and be well. If you have any questions, you can feel free to email me or at me on Twitter at ZorTrades.